Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, May 24th, 2023. It's now the 23rd. We start off in the S&P 500 daily chart in DeMark, looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has had the price flip to the buy, set up one count. And to negate that for end of day on the 24th, there must be a close above 4198.05 for the price flip back to the sell, setup count 1. Price closed under the cloud conversion line and above the cloud baseline and is resting right on top of the disqualified momentum up for 50%. Which has another chance to get qualified for end of day 24th with a close higher than the close from this bar here. It does that and skyrockets upwards because a deal was made on the debt limit, and this new line comes into play. It's at 4211.73 to start the day on Wednesday. And a close above it will qualify it. Head south and the baseline is there for support, and then it's this ongoing demand line, which for Wednesday will be at 4117.44, and a close below that level will qualify it. However, it needs to open below it and close below it for it to become qualified. If it opens anywhere above it and subsequently closes below it, it will be disqualified. And keep heading south, and the first trend factor disqualified down 1 is at that level for support, and that's right on top of the lower band of the Stark band. And then right underneath those two is the channel 3 low at that level, and get through that. And then there's a disqualified momentum down at that level, which is not support nor resistance, just a target level. And it looks like the fading opportunity created by these disqualified supply lines has panned out. So I think there's going to be more downside because in the S&P 500 daily cloud chart, an exhaustion alert down was printed, and those should be taken quite seriously. As you can see, the other 3 that have printed before have all panned out for downside. Granted, we do not know how far to the downside. It could be shallow, could be deep, but should be expected for more downside. And the cloud conversion line 26 bars back at 4119.66 should be good support for the lagging line to hit, as the baseline starting off the day for the 24th will start the day off at 4130.60. So price has to hit that. And then if it goes a little further, it's going to hit this conversion line 26 bars back, meaning the lagging line. So if it breaks through those two, we have some really serious problems. And break through those levels, as we'll see when we get to the big board. But basically the target to the downside would be around 4,000. So for tomorrow, it's at 40.03, and then it gets a little higher each day, so somewhere in the 4,000 zone, lower 4,000. Let's check in on the Qs. Have not done that for a long time, and since they are dictating everything, let's take a look. I have just about every sequential and combo on. And the one that's most interesting is this sequential cluster. You can see there's some aggressives and variables, but this sequential cluster is really a harbinger of a directional change in trend. Either it happens right away for a couple bars here, but then eventually had some pretty good upside, and then it printed a couple more over here, and you can see it bumped up the next day, but then came down and printed another one, and then it was off to the races. And the Qs have printed another one going the other way, meaning for downside. So here's a sequential cluster cell countdown completion 13. I'll zoom into this area now. So along with the sequential cluster, there's a aggressive combo and a regular combo, and they're both within the 12 bar metric rule. This one might be stale. Here, I'll count it now. This is the 11th bar after this one printed, so it has one more bar, and then it's really not valid for any more downside. However, there is this one for a couple more days, and then especially this sequential cluster. So again, we should take this quite seriously. And the rest of it looks almost exactly like the S&P 500. And there's an ATM chart length long-term overbought P alert down, and quickly that means this pressure alert, that's the P over here, this pressure alert has been up in the 102 range for this entire run. And when the pressure is at the top, they actually call it pressure down, but you can see it's been at the top and going sideways for quite a long time. And now this pressure alert down is printed, and this is a very good harbinger of the change that's about to come to the pressure line here. So it might not happen for another several bars or few bars or something, and this pressure will start to head down like it did over here, but this one didn't make it too far before it went back up. So anyway, that's just a heads up on a change in the pressure line. So this pressure down could stay up here for several more bars, even though there's some downside, and then it starts heading down. And when they're all up there like they were, the fast trigger down is now moved below the overbought line at 75 here, but a couple days ago they were all up here, the fast trigger, the slow trigger, and the pressure. So we should see some movement in the fast and the pressure headed down that way soon. And here's a zoomed out view looking back to that October 2022 bottom over here. The NDXHILO NASDAQ 100 will really show what a lagging indicator this EMA 5, 10, and 21 really is. You can see the 5 had a nice jump up today along with the red 10 EMA. The 5 blue EMA did make it under the 21 EMA, but then shot up. But you can see that this dotted line is headed straight up, and the line for the NASDAQ 100 itself in light pink right behind it is headed down. So this dotted line here is reflecting this up move a couple of days ago. So I would say we'll have to see what this does with the last couple of days headed down like this. So I'm still calling it a sell signal from the other day when the blue went under the red 10 EMA. And the KSTs look exactly the same as they did in the previous video. And the NASDAQ composite itself says lagging, schmagging. This momentum that the 5, 10, and 21 EMAs, blue, red, and gold respectively have, is just headed straight up, so the momentum is to the upside. There was a little bit of downside today. You can see over here. Again, the pink one is the NASDAQ 100, and the NASDAQ composite is this lighter grayish one here. So for now, the buy signal from back here on 510 is holding. Still no sell signal. And if you didn't catch this back on the 10th or a little bit after, there's no sense in chasing it now. And all three KSTs look exactly the same as they did in the previous video. The S&P 500 support and resistance levels big board chart shows the conversion line as the gray area along with the pivot point and the weekly ongoing demand line. To the immediate downside is S1, 21 EMA, the 20 simple moving average, the ongoing demand line, the daily baseline, and the weekly diamond extension bottom line of the perfect uptrend channel. To the upside is the top of the range, or former top of the range, 4164, the uptrend line from 06-16, 2022, and R1. And price in the aftermarket hours for the S&P 500 at 5:32 p.m. on the 23rd is 41.51. And the S&P 500 daily AD line went back under its 21 EMA signal line. And the NASDAQ 100 daily AD line is barely above its 21 EMA signal line. And the ROC 1 went underneath its negative volatility line, which is at negative 1.0, and the ROC is at negative 1.12 and pointed down. The ATR2 was still within its green low volatility zone, but is pointed up and is at 42.24. Get above 50 and there will be more volatility ensuing. And the PPO Extreme bumped down pretty good. It's at 2.65% above zero. And you could see the down levels here at PPO 6 and the up level at level 5. And the New York traditional McClellan breath oscillator to get back to zero would require 233 advancers over decliners to get back to zero. Have a great day.